The Biden administration will begin investing in low and middle income families through a new program next month. Starting July 15th, parents with children under 18 will receive monthly payments this year to help with the cost of raising kids. It's part of the American Rescue Act passed by Congress in March. The White House anticipates the effort could cut child poverty in half. It would also support the return to work for those without jobs by offering more child care options. For more on all this, I want to bring in CBS MoneyWatch reporter Aimee Picchi. Aimee, welcome. Great to see you. So break down the numbers for us, if you will. How much will these payments amount to? And do these payments compare to the child tax credits parents have received in years prior?
Yeah, thanks, Tanya. So this is a major part of the American Rescue Plan in that it aims to provide sort of a mini guaranteed income for families for 6 months. So starting in July through December, parents of children under 17 will receive these monthly payments, and they will get $300 for children under 6. And for children between 6 to 17, they'll get $250 per child. So if you think about that for a family with 2 children under 6, they're going to get $600 per month, paid on the 15th of every month. That's going to help for everything from food, supplies, diapers, and a lot of child advocates say this is also going to really help reduce child hunger and child poverty. So this is a major initiative that I think could surprise actually a lot of families. A lot of people aren't aware that this is happening, and it's going to start in a couple of weeks.
So they might be getting these surprise checks in the mail. Who qualifies for these payments to let people know? So maybe it won't be such a surprise.
Yeah, it's based on income. So, and also obviously having children. But it's like the stimulus checks that many families received over the last year, and that there's an income threshold. So for single filers, you have to earn less than $75,000 a year. And for families, it's $150,000 and less. And above that, it kind of phases out. So if you earn a little bit more than that, up to a certain point, you're still going to get some payments. It'll just be a reduced amount, similar to the stimulus payments that people got in the last year. That covers a lot of people. The IRS is saying there are 36 million families that are going to qualify for this child tax credit.
That's a lot. So is this credit then considered taxable income so people can prepare for that? Or can it be reduced for federal back taxes?
Yeah, that's a great question. It's not considered income. This is a tax credit. So you're not going to have to pay taxes on the money that you're getting. Similar to the stimulus checks that people received. That was also a tax credit, and people didn't have to pay taxes on that. There are a few things, though, to be aware of. First of all, the money can be garnished. If you owe debts to like a private debt collector, those payments can be garnished by the debt collector. So people need to be aware of that. But it can't be used to reduce your federal taxes. Like if you have a back tax payment due to the IRS, they're not going to take that money away to pay the IRS. So those are two things that people need to be aware of for both good and for possibly bad.
So why are some eligible Americans choosing to opt out of this child tax credit?
Yeah, so here's the thing. The IRS has opened a portal that allows people to withdraw from the child tax credit. And there are a couple reasons why people might want to consider this. One is if they actually don't qualify for it, they might want to pull their name out from the IRS's basket to make sure they don't get the payments, because the IRS is using your last income tax return to decide whether you qualify. If you lost income last year and you fall below those thresholds, but now in 2021, your income's gone back up and you actually don't qualify, the IRS is going to send you those payments, but you're going to have to pay it back to the IRS. The IRS has warned that if you get the money and you actually don't qualify, you have to pay it back. So that's one reason why people might want to opt out of these monthly payments. The other reason is some people just might want a bigger check at tax refund time. You can actually claim the whole tax credit on your 2021 tax returns and get just a much bigger tax return. Some people like that. There's also the possibility if you're divorced and your ex-spouse has custody or is claiming the children on their tax form as dependents, you want to make sure you're not getting that tax credit paid into your bank account because, again, you're going to have to pay that back to the IRS.
Aimee, you made such a good point there, because I think a lot of Americans, especially if they aren't aware that they qualify for this, because let's say, like you said, their income fell drastically during the pandemic, they get a check, they might think, oh, I have this check, and spend it, and not realize, as you just explained, that they actually would have to pay it back. All right, Aimee Picchi, thank you so much. We really appreciate your insight.
Thanks, Tanya.